Question one for reviewing KPIs was Faster Fitness has a bunch of gyms, and it's a pretty traditional gym with cardio and gym, etc. And at the end of 2020, Faster Fitness decided to implement a few changes. They decided to implement automation. They gave customers an app so you could receive unique workouts and diet plans, and that would replace not all the personal trainers and dietitians, but some of them. They also changed the management style. Because there's 37 gyms, they got each manager to adopt an autocratic style to enforce strict guidelines on how staff should interact with customers, types of exercises, etc. So we've got consistency across the gyms. We implemented quality control. Because of the app now, each time someone attends the gym, they can rate it from 1 to 10. So therefore we can figure out which employees customers are happy with and which ones they are not happy with. And then we can either discipline or terminate the poorly performing ones. And lastly, we offered some staff training. We got all our full-time personal trainers to do a certificate for in fitness. So we've got some KPIs. So this all happened in 2021. So we need to figure out accidents went down, but what has that got to do with these changes? Net profit went up. What's that got to do with these changes? Rate of absenteeism went up, number of sales went up, staff turnover went up, number of customer complaints went down. So what we need to do is basically say, well, why? What did these changes have to do with it? So our first question was define the term key performance indicator. A key performance indicator is a measurement, we need to see that word, that allows the business to collect data on its performance to determine whether it's meeting its objectives. So we really need to see the word measurement and whether we're meeting objectives. B, explain how KPIs enable Faster Fitness to evaluate and improve its performance. This is an awful question. If it does come up on the exam, we want to have a set approach. So we sort of answered this with 3 steps. And we said KPIs are going to enable any business to evaluate and improve itself because a business has objectives, and we did those in chapter 1, make a profit, increase market share, etc. KPIs will give you data on whether you've achieved these objectives. So that's our second point. And lastly, we say, well, once you've got this data, we can see whether objectives were achieved, and then we can develop strategies to improve. Where do we go well? Where do we not go well? So that's how we're going to answer that question. C, this is the big question. Analyze the extent to which the strategies implemented by Faster Fitness improve the performance of the business. So what is analyze? We're going to go back to the beginning of the year when we did the task words. That means break down a thing into parts or sections and then evaluate the whole. What does evaluate mean? It means discuss the thing, then give an overall opinion at the end. What does discuss mean? It means give 2 sides of the argument. We actually don't need to do that. The analyze sort of supersedes that. We can give all good points, all bad points here. I guess what we're trying to say is this is such a hard task word, analyze. I want you to break down this case study. There's 6 marks. One of those marks is going to be your opinion. We'll save that for the end. Did these changes work? What are the other 5 going to be? I guess I want you to break down 5 clear KPIs. Did they get better? Did they get worse? Now you can make them all ones that got better, or you can make them ones that all got worse. That doesn't matter. So we get rid of the discuss. We don't really need that. Okay? So let's break it down. So I'm going to break it down and say 3 clear improvements here from these changes. And what we're going to say is we're going to give the KPI, accidents went down, and then why. You've now got to go back and link that to the changes they made. Remember, this topic's all about change. So we would say automation with the app. So we're replacing the personal trainers, a lot of them with an app, means fewer accidents because there's less people there. Also, we used an autocratic style, just giving workers clear instructions. Both of those will decrease workplace accidents. So I've got, I've got the KPI, I've got the data, and I've got why, relating it back to the case study. Next one, KPI, net profit. The data went up, specifically from those numbers, that number to that number. Why? Well, the app means less personal trainers. Less personal trainers means less wages. Less wages means lower expenses. Okay, what else got better? Customer complaints, that's my KPI. Here's my data, went from 117 to 72. Why? Well, we implemented quality control where customers could tell the business what staff members are providing good service and what staff members aren't, and then we can discipline them. All right, but there's some bad things as well. Now, you could give all good because it's an analyzed question. They don't need to be all good, so they don't need to have both sides here, okay? But I'm going to give a couple of bad ones. And I'm going to say staff absenteeism went up from 7 to 16%. So the point is, what do? We go, here's my KPI. Here's my data. Here's why this happened. So the app automated the jobs of the personal trainers. Therefore, that caused them to be replaced. And I guess the remaining workers would be very unhappy. They probably think they're going to get made redundant by an app soon too. So they stayed away from work. I also said, what's the KPI? Staff turnover. The data, 12 to 30. Why? Well, because a lot of personal trainers were replaced by the app, you probably expect that to go up. That logically makes sense. Also throw in here, well, also because of the autocratic style, there's a high level of control, and maybe a lot of employees decided to quit. But now we're missing something. We've done 5 points. We've got the last one, which is going to be your overall opinion. And it can't just be, I think the changes were good overall, or I think the changes were bad overall. Try and give a rounded discussion. So I would say something like, the overall impact has been good, and that's where a lot of us are just leaving it. We need a bit more insight. So I'm going to say, it is to be expected that in the short term, there's going to be unhappy employees. However, what's the most important thing for a business? It's customers. And I would argue the KPIs for net profit, sales, and customer complaints tell me the customers are happy. Customers are happy, I'm happy as a business manager. Last question, sort of relating something from Unit 3 about stakeholders. Discuss the impact of the changes in KPIs may have had on two stakeholders. So I'm going to pick two stakeholders. Going back to Chapter 1, I think. We could say the government or the community or society. That's in the macro environment. In the operating environment, we had customers, suppliers, competitors, creditors or banks. And in the internal environment, we had shareholders, board of directors, management, and employees. So I'm going to start with the stakeholder that's been positively affected. I'm going to pick customers. And just for 1 mark, I'm going to say, what do they want from Faster Fitness? They want to receive a good level of service when they go to the gym, and they want to pay a reasonable price. That's what every customer wants. Now you've got to relate that to the changes in the KPIs. We need some data here. So the KPIs for number of sales and customer complaints say that the customers are happy. Okay? What does it say? It says specifically, more members must have joined if my sales went up. So that's really good. And if customer complaints went down, then customers must be happy with the service they're getting. So that's my positively affected stakeholder. Next one, my negatively affected stakeholder is the employees. What do they want? The employees of Faster Fitness want secure employment where they get a fair wage and have job satisfaction. All right, now related to the case study, I've got so many KPIs here saying here they are not happy. So staff and absenteeism and turnover went up. That tells me they're not happy. Why? You got to tell me why. Because we've automated a lot of jobs and adopted an autocratic style, and that's basically reduced the job security of employees. So they're either leaving or they're just not turning up.